Today is the 27th of November 2022, and happy Thanksgiving to those of you who celebrated Thanksgiving. Now, earlier this week, HP Inc. was one of the latest companies to announce layoffs involving up to 6,000 people of its current 51,000 staff. It even branded the cuts as, quote, future-ready transformation plan, unquote, because Wall Street loves buzzwords and companies like to sugarcoat bad news with big words. The staff reduction will be staged over time and will take place over a 3-year period. Sadly, for many HP employees, this will be one of the hardest periods to come because companies don't like to announce who's going to get laid off ahead of time. It will cost HP Inc. about $1 billion to pay workers who will be let go and those who will accept early retirement. Now, setting aside the mechanics of the upcoming layoffs, the company has been dealing with an awful market environment. High inflation and general uncertainty have resulted in consumers holding back on PC and device purchases or are simply unable to pay for what many consider discretionary spending as the prices of gasoline, bread, milk, rental, taxes, etc. double, triple, and in some cases quadruple. News outlets report HP Inc. Is looking at a 10% sales drop this fiscal year. In the broad PC space, demand has really taken a hit in the third quarter this year. Remember, the third quarter historically tends to be a strong period driven by the back-to-school season before the final fourth quarter sees another seasonal bump. But after last year's boom due to the post-COVID-19 pent-up demand, PC shipment fell roughly 15% year-on-year according to IDC and by more than 19% according to Gartner. The numbers are different because each analyst firm has different taxonomies, but the general trend is there. There are many alarming bits of information in the data. Firstly, the number of PCs shipped in 3Q of this year was down from last year, confirming that demand overall is shrinking year on year. The sequential drop is perhaps the most alarming piece of information because the seasonal trend of back to school has been broken, and it does not feel good with such market contraction. To get to these contraction figures suggests that the leading vendors fared really miserably. IDC shows shipment for Lenovo, HP Inc. and Dell, the world's biggest vendors, contracted by double digit, with HP Inc. producing the worst result at minus 27.8% based on IDC's preliminary figures. Obviously, the problem of falling demand is not just affecting HP Inc., Dell, Lenovo, and others in the PC space. We also saw over the past weeks similar announcements made by Carvana, Cisco, Lyft, and Stripe. Amazon is cutting its workforce by as many as 10,000 workers. Meta, who owns Facebook and Instagram, also announced cuts of about the same magnitude, or about 11,000. Twitter, which is going through its own problems after Elon Musk took over recently, saw its workforce shrink by some 5,000. Will that affect the ITAD space? Probably yes. My efforts to get ITAD executives to open up about their situations have yielded sort of mixed results. Most acknowledge the worsening environment they are facing, starting with the broad increase in prices for goods and services as the cost of energy began to eat away from profit margins thanks to Russia's war on Ukraine. My ITAD contacts acknowledge that logistics and general supply chain in their sector have been largely disrupted, and global markets for those operating in places like Asia and Europe have taken a hit either because China is freezing activities in cities due to the reemergence of COVID-19, dampening an opportunity for strong economic growth in the months to come, or Europe facing the potential of a harsh winter due to an ongoing energy crisis. Now, at Amazon, the cuts will affect the book and devices division, against hinting that hardware sales, as in the HP Inc. case, are not doing well. But many of my ITAD sources say they are sheltered because they have allegedly increased the share of data center decommissioning and cloud services in their revenue mix, essentially arguing that they may be protected from the ongoing downturn as a result. That, however, may be a weak argument in light of what is really happening out there. all the cloud giants, namely Amazon, Microsoft, and Google in particular, are also facing pretty difficult business environments. And by extension, this would affect the millions of companies they serve and the ones that service them, big and small. In their latest quarterly results, Amazon Web Services reported earnings and revenues falling short of expectations. Microsoft Azure cloud business also posted unexpected slowdown in cloud growth. Alphabet's Google cloud business fared better, but there is still a great deal of uncertainty as to the outlook specific to profitability for that company going forward. So what is driving this sort of tech downturn? Well, we know that inflation has been taking a bite out of businesses and their customers. That's not to say the cloud services and whatever infrastructure used to power cloud would eventually collapse. But analysts within cloud companies are reassessing their outlook and scaling back their earlier expectations, in particular, as their sales cycle has elongated drastically recently. Being used to double-digit growth, executives in cloud companies are now forecasting single-digit growth in 2023. And that will certainly affect data centers, enterprise servers, storage, and of course semiconductors and microchips. In the long run, though, the move of applications to the cloud will continue and will clearly renew strong growth in cloud computing in the years to come. Now, inflation has likely surpassed COVID-19 as the number one source of stress in the tech world. But companies are also concerned by the steep increase in labor cost. While tech companies are now slashing their workforce, earlier this year, demand for tech positions in the US increased double digit. Since then, obviously, we are now seeing a reversal driven by a severe inflation. Now, the news from the IT supplier ecosystem is also echoed by the demand side, specifically by enterprise IT users. A round of talks with IT managers confirms that most of them have been asked to scale back spending. While earlier this year, these IT managers reported high single-digit increases in IT spending, they have now brought their numbers to low to single digits as a result. The growth of IT budgets is going to slow down over the coming 12 months, while IT managers are being asked to look for ways to innovate as to compensate for lower budgets. Some of their marching orders is to forget about hiring outside developers and consultants and service providers. They are told that while cyber and information security, business intelligence, and cloud platforms remain a priority, they were also reminded that IT managers and the staff must rely on their in-house talent to make things happen, and perhaps keep using those hardware devices a little longer. The public sector is also hit by budget cuts. I spoke to half dozen state IT leaders, and they all say they are now either forced to cut spending or convince state bosses to seek more revenues on their behalf. That latter option is not likely for the moment due to political reasons. Both administrative and operational services are expected to witness budget decrease above and beyond IT. It's not just an IT problem. So are public sector schools. Now, many folks in the ITAD space note that when economic growth slows down, demand for used equipment allegedly rises. There is a possibility that it is the case, but there is really no empirical evidence in data suggesting that it is true. Remember, all downturns, starting with the 2008 financial crisis, showed that ITAD companies have also struggled to sustain business and suffered from the downturns resulting in subsequent consolidation of the sector. There's also the fact that the price difference between a refurbished device and a new system has been shrinking over time and is not so substantial these days, making it more challenging to convince buyers to endorse used equipment. Full disclosure, with the exception of my phone and tablet, all of my PC devices are refurbished units. Now, if you're an ITAD company CEO or a manager, what do you do in such an environment? Well, the first point I want to make is that we are not likely hitting a wall, but probably going through some speed bump. it was not so hard to predict that the post-pandemic bump of last year would inevitably follow with a downturn adjustment. Well, we are inside that downward adjustment now, which is further amplified by other problems such as the economic outlook of China and the energy crisis in Europe, the war in Ukraine, etc. So the ability to anticipate trends is an important part of the manager's job. Most of the companies that are reassessing their growth are anticipating lower growth rates and not necessarily negative rates. We haven't seen that, at least not for the moment. And so for now, it is fair to assume that economic downturn will last, stretch it, 12 months. And if it is shorter, then great. In the meantime, you certainly owe it to your shareholders a plan to reduce redundancies and unnecessary cost. This is more of an analytical work, but one that will require that you avoid cutting into core activities or too deep. You do not want to face the resumption of a growth period without proper resources. So make sure you protect areas that really matter the most for business continuity. What are these areas, you may ask? Well, each company has its own priorities, but skilled staff is probably a common denominator. So much so that IT departments in big banks, insurance firms, airlines, and other industries are relying on their staff these days to innovate to save the day. You may want to follow these steps by shielding the staff that matters the most. Furthermore, despite the decreasing price gap between old and new, the secondary market remains active, according to some of you in the industry. You do have big concerns about China as a market for used equipment, but all folks who track that market agree that there is pent-up demand for such products, that is, used equipment. That's also the case elsewhere, including the United States. So tighten your belt, yes, but stay focused as better days are coming. Thank you for listening, and until our next chat, goodbye.